Okay, welcome back. Thanks for staying with us. Had a longest chat on auto. Would be curious to take views. But before that, we have Anushi waiting by since quite a while. RVNL, that's the stock on our radar today. It zoomed 11%. Of course, after a decentish correction also that the stock has essentially made. But a 554 crore order is what is keeping that one in focus. Here's a bull versus bear case on this one. Anushi.
Hey Harsh, so as you mentioned, we've seen quite a bit of correction in terms of where RVNL is. This is especially after the Q3 numbers which came out, which were on the weaker side. So recovery over there in terms of where the order inflows are concerned. In fact, this brings us to the first bull point which is there higher order inflows. Now, every other day we keep on seeing more orders coming in for the company. In fact, if you look at the FY25 order book, the company is targeting over a 1 lakh crore of an order book. This is in comparison with the 90,000 crore current order book which currently holds. If we go back and even check what has been the trend in terms of the order book, FY23, the order book stood at about 56,000 crore. From there on, 85,000 crore, and now a 1 lakh crore order book is what we are looking at. So high growth in terms of where the higher order inflows are concerned, but is this translating to revenues is the main question, because in the end, it all boils down to the execution pattern. So revenue growth doesn't match up to the order book growth pace that is there. So this is on the bearish side, the case that we are making. We have seen in the last couple of fiscals, the growth has remained in the range of 5 to 6%. It's been a single-digit growth for the company. In fact, if you look to the book-to-bill ratio also, in FY23, 3x is what the book-to-bill ratio stood, which is now around 4 times. So execution is something that we should be watching out for. The company does plan to execute this 90,000 crore of order book in the next 3 to 4 years. So focus would remain on that. But coming to the second point is on the revenue growth, which was there. We just spoke about it. Now, if you look at the 9-month picture, the revenue picture, the growth has been, there has been a degrowth of around 11% at 13,496 crore. And this is on the back of a couple of factors which are in consideration. This includes elections as well as delays in some of the projects, which has led to this kind of a downtick. But the management remains very bullish. We just had recently we had a conversation with them, and they expect a 6 to 8% of a revenue growth in FY26. And this growth is not going to be based on the FY25 number, which is the low, which will form as a lower base considering this decline in revenues that we are looking at. But it's over FY24 that they project the 6 to 8% of growth coming back for the picture. But moving on to the third point that is there. Now, the expectation is that the margins also, if you are looking at, they have remained in the 5 to 6% of range. But the company is bidding for projects with higher margins in the range of 8 to 9%. And going forward, in the next 1 to 1.5 years, they expect an uptick in terms of where the margins are concerned. However, what we have seen is that the markets have not been too kind to the stock in the recent time. This is because of the kind of results that we've been seeing in the last 3 quarters. The stock is down about 35% in the last 6 months. In the last 1.5 to 2 years, we have seen a strong rally for a lot of railway stocks that are there, but valuations is something which has remained a concern. So if you look at what the valuation picture is for the business now, the current valuation that stands at about 49 times the trailing PE multiple if we take, and if we compare it to the 3-year average, that was at 23 times. So despite the correction that we've seen, is valuation still pointing towards a downward trajectory for the company, something that should be watched out for. But coming to the final point is this shifting focus from the traditional business. Now it is also concentrating in its non-railway business. It has a 40,000 crore of its order book is from the railway side, but the rest from the non-railway side. So it wants to diversify accordingly. However, in budget allocation, in Ministry of Railways, if we see the budget allocation stood at 2.52 crore. Last year, we had seen about a 5% growth. This year, the growth in terms of where the railways remained majorly flat. So this was on the bearish side, and this is the overall outlook that we are seeing in terms of where RVNL is and what the industry outlook is.
Okay, Anushi, thank you so much for joining us and giving us that update on RVNL, the bull versus bear picture. But Ajit, I want to come back to you on Tata Motors because this is something that was interesting. So while we cover the fundamentals, I wanted your view on the technicals here as well.
So Agam, we are in the 7 month of correction, and despite the oversold position, we are not seeing any sign of a decisive rebound. Means the stock have had made multiple attempts to reclaim its first area of resistance, that is 20 EMA. But after a couple of days of consolidation, it eventually resumes the overall downtrend. From the last 7-8 days, we are seeing some sign of pause, or the volumes have dried up substantially also. So this indicates somehow that sellers are also exhausted after this complete mayhem in the last 7-8 months. So this could trigger a surprise move, a positive move, once we see the stock surpassing 705 levels. In that case, it could be a very sharp move towards 760, 780 area also. So as of now, it's in a wait and watch. But yes, the way the price and volumes are portraying the current picture, possibility of a strong rebound is high. But having said that, one should not get carried away because we are not seeing any decline. Wait for the confirmation, wait for a breakout above 705 before entering any fresh trade.